Cash is king, and what should you do going into the end of 2023 into 2024? Get yourself loading that boat because you're about to dive in for the treasure and fly away with all the gold. Yes, this is the time to get yourself loaded in cash because a recession could be coming and you need to be ready to rock and roll when that happens. Yes, you don't want to be waiting in the tide, sitting there humbly abode. You need to be ready for the change when it happens, because it could happen today, tomorrow, next week, next year, next month. It's coming, and when it comes, look out. You are going to miss a lot of opportunities in the market. At the moment, there's a lot of overvalued stocks right here, right now. There is a few deals still at the moment. You can find them out there. Whether some of them are value traps is the question you got to look at yourself. You got to be a bit wary about these higher dividends settings at the moment, folks out there. Yes, because they've been cutting. You look at Foot Locker, for instance, they've cut their dividend. Look at their stock price going to the toilet. Retailers really has been struggling. We're not really seeing a huge yet in Costco. Is it going to happen? We're seeing a little bit in Costco, but if it really ramps up, then you're going to start to see recession fears. The cruise lines, holidays, if they start not getting booked, then you start to realize if we start to see the job losses coming, and there's some danger signs there. The unveiled curve's been there for over a year now. Nothing is yet to happen still in that space. So to me, you've got to get yourself ready. Yes, you've got to get yourself ready with cash in hand. Yes, why you need cash in hand? Well, this is something you always should have in your portfolio most of the time. So, say you got 100K. Now, if you want to have 10%, you have to have 10K lying around ready to go. If you're just starting and you've got 1,000 in there, you need to have 100 for 10%, for instance. So it's a good basis to always have about 10% cash, because you never know when a stock can go on sale. But if you can get to more 20% cash, I think that's where you, not in every market you need to be, but in this particular market, I think you need to be pushing 20%, 25%, really pushing, getting that cash load, savings up ready for those big drops. Because the stocks can just keep flying up. Some of them will, but there's going to be a stock that you own, no doubt, that is going to go whoo, right down, and it could be for no reason. We've seen it with Facebook, was one of those stocks, absolutely down the drain, and it skyrocketed back up. Now it's plateaued, and really, is there going to be much gain? There will be some gain in the future, but over the short term, is there going to be much gain? No. So you need to find that next stock that's going to go like that. Who's it going to be? That's where the cash flow you got to find. Because I can see a lot of these stocks that have made all these gains, you might lose a bit of it. Or you will lose a bit of it. If the recession comes, you'll see the stocks slash in half again. So, do you want to invest in a stock like Facebook at $300? Or if it crashes back down to 200 or even less again? If a recession comes, it's going to happen. Guaranteed. So that's when you want to have cash ready to unload on those times to buy those stocks at good prices. Now, not every stock is a great buy. Now, Foot Locker at the moment is not. It can potentially be a good buy. I'm giving this as an example. At the moment, Foot Locker is in the decline, and they've cut their dividend. Okay, so you'll probably wiped out 50%, if not more, of your audience will never come back to Foot Locker because of that reason. They got dudded by the dividend, especially if they've been in Foot Locker for a while. So they've been dudded by the dividend. So you're going to have less likely for people to ramp back into Foot Locker anytime soon. And then it can keep getting less and less devalued. And then people go, yeah, I'm not going to buy a Foot Locker anymore. Because a lot of those people probably like Foot Locker as well. The shareholders were also buying from Foot Locker, and they might go, I'm not buying from Foot Locker again, I'll go to Nike, Adidas, all the other companies. So that's the question. And yeah, if they continue to cut prices, and then they can end up solvent. That is the danger here with Foot Locker right now. clearly there is some up risk. I mean, it can absolutely jump up double, triple where the prices is now going into the future. I think you might be waiting at least 2 years for that to happen. If you're if you're happy to wait around and just keep buying the stock while it's low and hope that happens, then it's definitely an opportunity risk-reward ratio for you. But there is also the opportunity that this company is going to keep going south, 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 and the end of days for Foot Locker. We'll see if that happens or not. Let's just give you an example of what can happen, and I want to give you another sample of where a couple of stocks that could really go bad. The travel stocks there, but it's cruise lines in particular. Royal Caribbean and Carnival Cruise Lines, Norwegian as well. Now, they are still, to me, on price, look like value. Especially Royal Caribbean. On price, they look on value. But if we have a recession for both of these companies, especially, well, both of them, but more importantly, CCL, they could go bankrupt. They have very high debt and high interest rates. All these companies at the moment. Royal Caribbean has really done well to pay a lot of it off, a lot of their debt off, and they've still got some debt. If we go into another recession, and it's a long one, I'm worried for those stocks to absolutely kaput. Or if you are going to buy into them, if you've already bought into them, it's going to be a long time, maybe 20 years before you even recover. There's big pressures on those stocks. If a recession happens, if a recession doesn't happen, then they're probably bargains for days at the moment. So that's the risk reward you got to look at stocks like that at the moment, because they're very high in debt. I mean, these companies are normally high in debt, but they're in higher debt than normal. So they really need the economy to keep on rolling for them to but cash, you need to have cash available so you can get going. Now, where should you invest at the moment if you're wanting to invest and you don't want to hold that cash? Well, you've got a few options. So with the cash, obviously you can go into treasury yields if you're in the US, or high. Well, you can get, at the moment there's a lot of online stuff. You can probably get 5% for your savings. I know there's a few companies across New Zealand and Australia that do the same thing as well. We can get up to about 5% on your money. You can also go term deposit if you want. You can pull that out at any time. You just won't get all that deposit guaranteed. That's the only problem with doing a term deposit, but you'll get the interest on what you have. If you have to let go, it'd be better than sitting in a bank account that's giving you not much interest on the basic. So that's where you can look at if you want to get and make your cash work for you at the moment. Would be looking at some of those sort of yields. But yeah, I think you need to get yourself ready, because there could be a absolute plane crash, whatever you want to call it, flying at you here, and you want to be ready to load the boat, get that treasure rolling as you take these stocks at beautiful half price bargains or more. Some of them might already be there already. People have just forgotten about it. There's some stocks, I think, in the market that are still good value at the moment. People are just not seeing it. So it's a good time. It's probably a good time to get more into cash. Get yourself ready for the big uplift. If it continues to rise, well, you will just start spending that cash. It's all about moments at the market. The market at the moment, when everyone's saying it's sweet, it's all sweet, it's often when the crash can happen. So just get yourself prepared for a crash if it happens, and be ready to load the boat if you need to. But thank you for joining me here at Barry Charles. Have a great day out there.